Hi everyone, welcome to Ivy Venture. I just read that Warren Buffett, the world's best investor, made over 99% of his massive fortune only after his 50th birthday. It shows us that it's never too late to start securing your financial future. By keeping this on our mind, let's go into today's video. We're going to see about hedging today. Generally, I would recommend traders to always use stop loss while trading because if you don't put stop loss, then you are taking maximum risk to unlimited extent. But you can also trade without stop loss. We are going to see how it is possible. For that, I am going to explain you about two methods today by which if you use any of the one method at least you can able to trade without stop loss. Method number one, we have to trade without margin, that is in less volume. Suppose if you have like $10,000 in your account, if you like to use margin, then you will have to take one standard lot or two standard lots. But you didn't use margin, then you are highly recommended to use only one mini lot. That is, when you are trading in a small quantity, you don't have to put stop loss. Why? Because we are not taking high risk. But here is a drawback. We cannot make much profit. Method number two, hedging. Hedging is a process of making profit if even our actual trading plan gets failed. There are a lot of strategies in hedging. It is a commonly used technique among institutional investors, corporates, etc. Now let's see this in detail. First, you need to know that there are two types of accounts existing because most people doesn't even have any idea about that. So the two accounts is netting account system and hedging account system. If you take netting account system, in simple words, if I had to tell you, like one lot buy will be closed by one lot sale. So this is the concept of netting. But if you come to hedging account system, for example, if a trader buying Europe USD volume with one lot, some time later the trader decides to open a selling position on this instrument, also sized the same one lot. With the hedging system, the positions now opened will be one lot Europe USD buy and one lot sell. Now, if we thought to open a new position, then that will appear as a new order at a new price and volume. That is, it will consider to be a separate new order that you are making instead of squaring it off. As I told you, there are a lot of strategies in hedging. First one is straddle hedging strategy. It is like betting on both sides on an asset class, which means we should play the role of both as a buyer and also as a seller with the same asset class and at the same time. Second one is mixed asset hedging. It is a popular method among people which is investing in both gold and stock indices. Generally, when gold price increases, indices will decrease, and when indices gets increased, gold price will fall off. Third one is currency hedging. Currency hedging is popular among nations which helps countries to safeguard their country's wealth. When it comes to trading, we normally use straddle concept. For example, person A buying 100 quantity of some XYZ company's stock, person B selling 100 quantity of XYZ company's stock. Now, the new person, person C, buying 100 quantity and as well as selling 100 quantity of that XYZ company, right? If the price goes up, A will be benefited. If the price goes down, B will get benefited. And if the price either goes up or goes down, anyway, person C will get benefited. So the person C can book some profit while the price goes up, and also he books profit even the price goes down too. All you have to do is book your profit when it reaches up and need to book profit when it reaches down. Let me show this in a live market. I'm going to place a sell order. Looks like the resistance is here. So I'm planning to place stop loss at this point. Instead of stop loss, I'm placing buy stop. Then I'm planning to fix the target price at this point. If my trade goes as per my expectation, it will hit my target price. But if it goes against my expectation, then it will enter into hedging. This hedging will have to be closed manually at this point, considering this is the strong resistance point. Mostly price may touch this point and fall off. So anyways, this order will give profit to me. So now when the price comes to this point, resistance 2 point, you can also close this another order. So that's it for today. Thanks for watching. We would love to hear your questions, thoughts, opinions on our channel in general or about this video in particular. Your input will help us help the world invest better. Email to us at below shown email ID. Thanks for watching. Please do subscribe our channel.